Well, hello and welcome YouTube. This is the weekly video. Let's see what's going on with the markets and let's look at a couple of new ideas here for us to get into and make money going forward. Now, right now, the market is just below its 200-day moving average. Okay, so right now, the 200-day moving average is 4492 and we are sitting at 4488. So we are below the 200-day moving average. We're below our opening range low. So we're in bearish opening range mode, but we could very easily get a bounce from the 200. So this is going to be a very important level to watch. There is the 50-day below there as well, but the 200 is very significant. If we get another strong daily close, closing on or near its low below the 200, that may trigger more selling. So we'll be watching that very carefully. If we have a look here at the overall workspace, we can see that the Nasdaq was certainly weak, down 1.41%. Anything more than 1% is significant. Dow Jones Industrials was up slightly, but not anything significant. If we have a look here at the sectors, we can see a lot of strength here in XLE or energy. Looking like it's hovering there around that 80 mark and looks like it now wants to break out. Up significantly on Friday, 2.92%, by far the strongest of the indexes. A lot of weakness in the largest sector, technology, down 1.6%. Second largest sector, financials, was up 1.17%. But really the focus here is on energy. Okay, so we're going to focus my ideas there. We've been doing very, very well with our energy trades. So if we have a look here at XLE, we can see it's been using the 21 EMA as a support level and using that to continue to trend upwards. After a significant move higher from around 55 to almost 80, then got some sideways consolidation, but still remaining above the 21, very significant, and now looking to break out. So I'm going to set up a trade that will make me 110% return on my risk in the next 39 days. 110% return on my risk. So all I need is for energy, XLE, this sector, to move above 82, and I'll make 110% return on risk. Pretty amazing, right? So I believe it could do that by the 20th of May 2022, and I'm setting up a trade to do exactly that. Now, another one that I'm looking at within the same sector is APA, because that's where the money flow is, right? So same sort of thing, use the 50 twice as a support level, and now using the 21. Looking very strong, looking like it wants to move up. It was up 5.29% just on Friday. Now, this stock does look like it wants to move higher. It's operating within a strong sector, okay, and the industry with oil and gas. I think it's looking good. And if we have a look here at the fundamentals of the stock, so if we click on statistics, we can see here, its market value is much less than its enterprise value. Why? Because it has a lot of debt. That's pretty normal for oil companies, right, to have large amounts of debt like that. But you have a look here. Look at the return on equity, the return that the owners are getting for their investment in the company, 2,707%. I look for something above 20. So that's incredible. We look at the revenue, quarterly revenue growth year over year, 90.5%. That's fantastic. Quarterly earnings growth year over year, 3,720%. Wow. A lot of debt, like I mentioned. And we look here, held by institutions, almost 90%. If we look here at the analysis, I want to look at the growth rate. That's what causes a stock to move higher, growing your earnings. We can see here the per annum growth rate for the next 5 years is looking at a 26.55% growth rate per annum. Fantastic. Now, if we look here at the financials, we can see that the revenue has bounced back very nicely from last year. And we look at the free cash flow. Much money is available after paying for your outgoings and your obligations. Look at that beautiful increase in free cash flow. That is a thing of beauty. In a beautiful uptrend, in a strong industry and sector, I like it, right? So what we're going to do with this one is we're going to set up a covered call, a slightly out of the money covered call. We're going to buy the stock right now, and we're going to set this up so that if it does finish above 45 come the 20th of May, we will make a 10% return. right? 10% return in 39 days. So that's a very nice trade if that occurs. And that's another trade that we're looking to get into, right? Now let's just talk briefly about Bitcoin. We know that it had that move, right? It was in the trading range for a while, consolidating, broke out above 45, and then ran into this like wall, if you like, at the 200-day moving average. It then broke below 45, so it didn't hold that resistance level, or that support level, should I say, and then has actually moved down below all of the key moving averages, the 21, the 50, and the 200. So that's obviously bearish. It could come all the way down here to 37,500 again, right, before them, but potentially bouncing. Who knows? So we will see. But my theory is that with Bitcoin, we may be seeing a sell wall here at the 200 or around the 200. What is a sell wall? It's a very large limit sell order, or maybe a combination or accumulation of sell orders at one price level on an order book. Now, this sell wall at the 200 or around the 200, it could be created by a single entity, or it could be created by multiple orders placed at the same price level. Typically, when you see a sell wall, it's created by a single trader. Now, that single trader would be referred to as a whale due to the fact they've got a large amount of Bitcoin. Whales are often able to influence the price of an asset, and in this case Bitcoin, and sell walls are one of the tools that they use to do that. So for example, there could be a trader there, a whale, with a sell order of say 20,000 Bitcoin right at that $47,000, $48,000 mark, just below the 200 there, right? So they've got 20,000 Bitcoin at that level. Now the order book will show a big sell wall, and that will prevent the price from going above that 200-day moving average. In other words, it would require a lot of strong buying pressure and a significant amount of money to go through that sell wall and break the 200-day moving average. So these sell walls are often placed to scare or cause certain impressions on other traders. These orders are rarely filled in their entirety. In fact, whales often create and remove sell walls multiple times in an attempt to influence the price of an asset. So, for instance, a sell wall may cause other traders to place their sell orders below the wall, potentially causing a downward move. And I think that's probably what's happening here. Why would someone do that? Well, it gives these whales or these institutions more time to accumulate Bitcoin at a lower price. Let's accumulate as much as we can at this lower price. Once we've now accumulated all that we want, then we can drive it higher. But in the meantime, we're suppressing the price through the use of this sell order. That's just my theory, and that could be potentially what's happening there with Bitcoin, right? The largest convention right now is going on with Bitcoin. Some very exciting developments coming out of that. It's still ongoing, and I still believe moving forward that Bitcoin will appreciate significantly from where we are. So that's what we're looking at here. We're keeping a very close eye on the 200-day moving average with the SPX, the overall US stock market, and we're watching Bitcoin as well. I've just shown you two trades, trading the actual sector itself, XLE, and then also trading a stock within XLE, APA. And I've shown you the exact prices and the exact returns that we'll be getting with the trades that we're setting up. Options, best, most powerful, flexible investment vehicle on the planet, allow us to make incredible returns in a relatively short period of time without utilizing or without needing a huge amount of money. So I hope you guys enjoyed that. I'll talk to you again next week. My name's Sean Allison. All the best and bye for now.